All right, good morning, y'all. John here, ready to talk to you about some of the trending articles in the crypto news space. Woo! All right, I got an interesting little lineup for y'all today, but first things first, thank you to all those who have subscribed. I really do appreciate it. And any articles we discuss in here, you can find a link down in the description to the channel where all the articles are, or the articles themselves, depending on where you're finding me. I do upload this to multiple platforms, and for the podcast side of things, I link to the YouTube video that's got the links all down in the description, just so you're aware. But yeah, I guess without further ado, let's get in. VeChain and TRON are partnering up. Good for them. Well, not the straight up main protocols themselves, but two different betting platforms that both exist separately on each of the networks. Still, it's a really cool idea, and I'm a big proponent of cross-chain communication and utilization. It helps join two different user bases together, and that can only lead to the growth of both. I mean, it's a really good idea, quite honestly, and it's a good way to get someone who might be a Tron devotee or a VeChain devotee interested into the other blockchain that could then spur new users and new growth for both. So to me, there's no downside, quite honestly. But getting into things. In a press release, the VeChain-based platform Plair, Plair, announced a new partnership with the Tron-based platform JustBet. Oh god, Justin Sun, JustBet, Just Swamp, just this, just that. Like, I get it, okay? But the aim of the partnership is to enable decentralized betting on the VeChain Thor blockchain. According to a statement, Plair is a platform based on VeChain Thor with the vision to make betting accessible and easier for a wide audience. Provides people with access to rewards, app development tools, streaming services, and all that stuff. So kind of a jack of all trades, but their main focus is on betting. On the other hand, JustBet is a platform which, according to the publication they're pulling this from, offers the first decentralized platform for betting games. It enables users to use their money to bet on dice, lotteries, poker, baccarat, and others. It's not too bad. Kind of an online casino vibe. I'm liking it. JustBet does not require the intervention of an intermediary and runs on a TRC20 token, WINR, or winner. I see what they did there. It's pretty nice. But yeah, no, they're linking up. So, because JustBet is Tron-based, the release states the partnership is going to allow the VeChain ecosystem to grow with a cross-chain partnership. I've criticized Tron in the past because the way they plagiarize or are accused of plagiarism and kind of Justin Sun's hype man stuff, I felt could limit cross-chain communication or like other platforms wanting to partner up. And while, like I said, the two main protocols aren't partnering, this does show that even with all that, there are still people out in the space willing to partner with them. So I stand corrected. I will back down from that one, but Tron's main platform, I'm not seeing a lot of cross communication yet, but that is still an early thing, so we'll see. JustBet will be integrated with the VeChain Thor through the proof of authority protocol for multi-party payments. This will allow users access to Plair's PLA token and VeChain's VET for use in their bets, or VET, VET, however you want to pronounce it. Additionally, Plair will integrate a VeChain Thor wallet and smart contracts into the JustBet platform as a strategic partner and advisor. That way, Plair users and the VeChain community will be able to play games with each other and add value to the entire VeChain ecosystem and help out JustBet a little bit as well. According to the statement, the integration of the PLA token in JustBet is in line with the vision of the betting platform that seeks to, quote, make everyone a winner. It's going to help them grow the blockchain gaming market together and all this other stuff. It'll increase the user bases and all that stuff. Really, this is a very good thing for both. Plair and JustBet partnering up, growing everything, doing this, doing that. It's a good thing. Both based in different cryptos coming together to link up and do their thing. I'm pretty happy with it. I think you guys should be too, especially if you hold VeChain or TRON. Um, these are the type of things that we're going to need to be doing as the years go on. So they're doing it. Good for them. All right, let's hop on over. Oh, Rich Dad, Poor Dad. He pops up all the time, and a lot of people who've read his book, Rich Dad, Poor Dad, have just really good reviews and really like it and how it's changed the way of thinking. And I'm like, well, maybe I should read it. I honestly haven't. I've heard it so many times it's almost memeable to me, but if that many people like it, must be doing something right. I know he's got a new book out, so that's probably why he's popping up so much. Just kind of like keeping himself in people's consciousness. Maybe you'll check out Rich Dad Poor Dad. Maybe you'll check out his new book, that type of thing. But he has said that Bitcoin is an essential investment as the world is about to face a, quote, major banking crisis. August 21st tweet. The author of Rich Dad Poor Dad told followers there was no time to think about investing in safe havens as, quote, the Fed and Treasury to take over the banking system. Fed and Treasury helicopter fake money direct to people to avoid mass rioting. Not a time to, quote, think about it. How much gold, silver, or Bitcoin do you have? I mean, he's a pretty well-known supporter of Bitcoin. He really just wants to get people out of fiat as much as possible. I'm a big proponent that you do need to have some cash on you. You do need to invest in some stocks. You do need to invest in some crypto. You need to spread your money out across as many platforms as you can while still maintaining reasonable amounts in all of them. So that way you can then, weather the storm. Like if crypto tanks, but your stocks are doing well, great, and vice versa. At least then you're kind of like maintaining, with all of them supposedly raising over time. You get kind of this like up and down wave pattern that takes you higher and higher as the years go on. That's just my personal opinion. But he does feel that the coronavirus crash has only exacerbated his calls to exit dependency on fiat, in line with various Bitcoin proponents who fear that the coronavirus responses by governments have all but doomed already inflated paper money. The Fed in the United States is abandoning their 2% inflation target that they've had for, it seems like forever, just because with the amount of money they're pumping in as the economy does recover and people start buying more and more, it's only going to drive prices up higher, and that's going to lead to probably 3 to 4% inflation, which in the grand scheme of things isn't that bad, but it's definitely double what their current target is. And to be missing the target like that, it will have negative connotations to look like we're missing it, I guess, in the minds of people. So that's why they got rid of the 2% thing, and be like, no, we know it's going to be more. It's okay, don't worry. It's all about calming people in the markets down. August is seeing some pretty fresh worries over the state of the world economy. The Fed in the U.S., their balance sheet, having previously dipped below $7 trillion, is now back at that level. So it's a sign that the central bank's continued intervention in central markets is kind of necessary. Of course, the S&P 500, the stock market, hit record highs this week despite the uncertainty associated with the coronavirus and its financial impact on the average American. The stock market does not really reflect how the world is going, in my opinion. It's propped up by the amount of stimulus that the Federal Reserve is pumping into the markets to keep things high, which will do one of two things. Either we'll eventually come out of this and it'll only spur the markets higher, or any setback, it could capsize this whole thing and lead to massive drops. It's really like the stock market feels like a bubble because it feels disassociated from reality, but it's because the United States is just pumping money into it. We'll have to see where it goes. But hey, let's leave old Rich Dad Poor Dad alone and head on over and talk about Augur. Yeah, we're talking about gambling a lot today. A little throwback for me. I used to work in a casino. Quite fun it was. I actually missed that job, but these days it's a little dirty in them places before, and I wouldn't want to be there now. So, trading boomed this week for Augur. Ticker symbol REP, the coin that underlies the ambitious decentralized betting protocol masterminded by Joey Krug and a couple others. Its price hit highs of $30 on Saturday, and trading volume is through the roof. So 50% increase according to data from CoinMarketCap. This was Augur's highest price since January of 2018 when it was $110, which is quite a bit. And at peaks of 163 million on Saturday afternoon. It was up from 12 million on Thursday. Its daily trading volume hasn't been this high since, again, back in January of 2018. That's kind of interesting. Sunday. So today, Augur's price fell back down to $24. Trading volume was down, but then it's kind of sitting there in that 24 to 25% range. But the trading volume is still a lot higher than it used to be, But so often in crypto land, I do like that term, what the coin actually does is forgotten. So Augur powers, the decentralized betting market, claiming to harness the wisdom of the crowd. Augur allows individuals to place bets on anything they like. Current gambles include whether Donald Trump will win the United States election in November, highly unlikely, and whether Bitcoin will reach $14,000 by the end of September. Well, Donald Trump is highly unlikely right now. A lot of things can change between now and November. But hey, according to predictions.global, a site that tracks Augur markets, gamblers are currently staking about 7.9 million, which is, far less than the daily trading volume of the Augur coin. There's only about 84 public betting markets right now. And they're kind of expensive. Transaction fee is $23. It's kind of a recurring theme. Ethereum gas prices are choking the life out of DeFi and all of things. So high transaction fees are the bane of the crypto market, which is why we see so many people talking about cross-chain collabs and proof of stake sharding and all these other things, because they're trying to increase transaction size to keep up with the growing demand. Once someone finally cracks that nut, which IOTA it seems to be doing pretty well in that. We're going to talk about them a little bit later in the video and what they're doing. But any place that can do that and increase that TPS is going to be a huge game changer in the crypto space. And once one person does it, it's only a matter of time before copycats emerge. All right, well, here, let's hop on over article number 4. All right, well, hey. So we got an interesting one here. Some researcher has remined some of Satoshi's old Bitcoin blocks to try to parse out a little bit more about them. So more of an interesting little thing, but quite a good read. So Sergio Dermain Lerner, a researcher known for looking at the mining patterns of the original Bitcoin miner, turned his attention to the Bitcoin blocks mined by Satoshi Nakamoto. He made a preview of his latest findings available to Cointelegraph, where I got this lovely article. His research is based on the irregular pattern of the least significant byte of the nonce field of the block. Yeah, so he's really digging down to find some stuff. Really digging down. He suggested, based on some new research, that Satoshi refrained from mining in the first 5 minutes of the block interval. Other researchers have also expanded on his research. TechMix showed that all the blocks mined by Satoshi could be grouped into 5 baskets based on the frequency distribution of the nonce LSB values. Like, seriously, they're really digging down into these things. So basically, a nonce gets incremented with every new attempt to solve a mining puzzle. Apparently, Satoshi's equipment was not used in the entire available nonce supply, only focusing on a limited range. So, yeah. Clear? Good. We're all clear. He had a specific pattern. He didn't just mine the entire time or try to mine it the entire time. He jumped in a little bit later on the block. Basically, what this theory is ending up supporting is that Satoshi, with his Patoshi pattern, was simply mining a multi-threaded high-end CPU, not like a mining farm of a bunch of different computers or anything like that. He was simply just kind of doing it on a computer. A lot of people have theorized that he's done a lot. Basically, if the conclusions that learner is drawing are correct, it could lend more credence to the hypothesis that Satoshi was a single person and not a team. So it also put another nail into Craig Wright's claims of being a Bitcoin creator, as he indicated numerous times he used dozens of computers to mine the early blocks. I mean, it lends more to the idea that it wasn't a team, but it doesn't mean it was just a team using one computer. But again, Craig Wright, he might be very early into the Bitcoin game, but he's not Satoshi Nakamoto. And he's just pumping up himself. Everything he does is just a publicity stunt to keep him relevant enough to get clicks, to get views, to get money. Cool. All right, but still a little interesting thing that old learner is doing. But they're saying he used this single PC to mine $1.1 million worth of Bitcoin. So that's a nice chunk of Bitcoin. And that Satoshi wallet is sitting inactive, I believe. Or a few of them are. God forbid us if those things ever move. All right, hopping on over. Talking about VeChain itself. So VeChain's getting 2 mentions in this one. Not too bad. They launched a blockchain-enabled sustainability solution aimed towards companies looking to digitize their sustainable practices. So a little niche, but green technology is where it's at. So VeChain promises the solution can streamline sustainable practices during the supply chain and manufacturing process, and will also showcase these practices to third parties like regulators. So not only will we help you do it, but we'll help you prove that you did it. Good. VeChain stated the tool provides immutable proof of a green supply chain and can cover different stages of manufacturing. It can also store information on recycling, processing, reusing, and inspection, allowing brands to trace original sources of goods and raw materials, which is like VeChain's thing. It's a nice little thing, and like I said, it's good that they're doing the green technology. I do think that is the way forward. We only got one planet, and whether or not you believe that global warming is man-made or naturally occurring, I prefer clean air to dirty air. And that's just where I come down on it. Regardless of any of the other facts about it, I prefer clean air over smog. So I like green technologies because I don't like smog. It's just kind of where I stand on it. So that's just me. So VeChain has said that research from the World Economic Forum has showed companies face higher risks as demands grow for transparency on sustainable activities, as well as the direct impact of climate change. And I already prefaced my opinions on that. Like I said, VeChain has been expanding the supply chain side of things for quite some time now, and they've been doing quite a good job at it. They're getting a lot of different partnerships and things like that in conjunction. The price of VeChain is not insane compared to it was a few months ago. It's risen with the rest of the cryptocurrencies, but it's going to be around for a long time with partnerships like these, and that will lend for more stock-like growth, I would say. But we'll still have those breakouts because crypto is a crazy, crazy space, and that's what I love about it, despite that huge, insane dip that happened the past couple of days. My goodness. Hey, let's hop on over and talk about IOTA. So Chrysalis Phase 2. We're talking about decreasing transaction size, which should actually raise their speed because they won't have to wait so long to process them. But IOTA developer Hans Moog has revealed new details about Chrysalis Phase 2 via Discord. As already announced with the announcement of Chrysalis, the upgrade involves a change from the bundle concept to automatic transitions. IOTA David Stonsbo stated in February that the upgrade will be accompanied by numerous improvements to reduce network overhead, significant verification burden, improve spam protection, congestion control, reduce the lengths of Merkle proofs for future sharding purposes, and it will reduce the implementation efforts and increase maintainability of core node software. So basically, they're thinking this is going to tackle a lot of issues. Sorry if that was loud, but I'm really excited about it. I do like IOTA. Don't hold any, but I do like it. But what exactly will this mean? Well, until now, IOTA has used the concept of bundles to create transactions. Bundles are transfer packages that contain at least one input and one output transaction and can also include zero value transactions. Up until now, the individual transactions have been linked to each other via this like so-called like trunk. They just like bundle them together into this trunk and send them off. The bundles themselves are atomic transactions, which means either all the transactions are accepted by the network or none. So if you got a bad transaction in your bundle, that can really suck. So as Hans Moog explained via Discord, the transaction size will be about 20 times smaller. As a result, they'll be able to send 20 times more messages per second. So it will absolutely help things out. He was quoted as saying, "I agree that bundles are BS, and that's why they are removed next. Currently, the bottleneck is network throughput and ternary conversion. So currently a bundle is about 5 to 8 kilobytes. After Chrysalis Part 2, it's going to be 350 bytes. So huge reduction. So if you say a bundle has 3 transactions and therefore compare 1,000 IOTA TPSs to 333 Bitcoin TPSs, then after Part 2 you will have 4,000 to 5,000 real transactions per second. So basically pushing things through to completion. Pretty good. Again, IOTA's Chrysalis upgrade has been quite interesting to watch it develop, going from nectar to pollen to nectar to honey. This is how they're terming the 3 phases. Phase 2, I believe, is the nectar phase, and they're working on it, and then honey will be this feature complete release. They're probably going to keep developing after that. Never rest on your laurels for too long. I was always a big fan of my coach in high school. If you won a game Friday night, great. Go out, celebrate tonight. Saturday morning, we're watching video for next week. Take your time, enjoy, and then come back ready to work. So, interesting to see where this goes and how this affects the price going forward. But I do think IOTA's in a good place, much like VeChain, for long-term success. But all right, finishing things up with just kind of a little article. PolkaDot is adding 40% daily volume as Bitcoin enjoys a fairly calm weekend. I mean, we had pretty nice drop. I'm pretty upset with how it's gone. I do miss the over 12K Bitcoin, but it doesn't mean we won't get back. So Bitcoin and most large cap altcoins have recovered from yesterday's price lows. However, most altcoins are still far below last week's all-time highs. They are. Cardano is suffering. Props go out to them. Best of luck. So, from a technical standpoint, Bitcoin now struggles with significant support turned resistance area of 11,600. In case Bitcoin decisively overcomes it, the next resistant level is likely 11.8 before another standoff with 12K and 12.1. As a reminder, Bitcoin saw a false breakout last Monday. Well, it stayed over 12K for a little bit, but it didn't do too much. I personally was hoping it was going to trade in that channel for a while, but as large altcoins recover, PolkaDot's firing up its engines. After some controversy around its listing time, the DOT token surged to over $4, which is approximately 40% on the daily. DOT belongs to PolkaDot, a project that carried a broad interest in the crypto community. The project completed its second token sale a month ago after a first sale in 2017. Besides DOT, most altcoins have recovered from yesterday's dips, though still far from their 2020 highs. Ethereum dived down to 378, but is back up close to 400. And then Ethereum got rejected there and has been back at 387 at the time this article was written. Ripple is back to about 28 cents. Chainlink's gone up 7%. Link is still the 5th largest digital asset by market cap, so it's doing all right in the grand scheme of things. Then going down the line, Balancer's up 20%, Byton's up 19%, NEM's up 17%, Kusama's up 15%, Band Protocol, which is an alternative to Chainlink, is up 15%. They're also increasing respective value by double digits. Interestingly, the data from markets company Santiment connects the most recent Band price bump with the social media volume rising regarding the asset. According to the company, the social spike foreshadowed the price uptick. There's definitely some people who time and look at those social media upticks to try to invest in the market and capture something, because why not? They're all going to. But yeah, good for PolkaDot, up 40%. We've talked about them previously on the channel. They're definitely making some moves and developing some stuff. Personally, I don't care for the name, but that's just me. But hey, that will be the trending articles in the crypto news space today. Thanks for checking me out. If you made it to this point, I mean, you might as well subscribe. You get to hear me talk close to every single day. This is a daily thing I drop, but 7 days a week is quite rough, so sometimes I'll do more, sometimes I'll do less, but I do want to thank those of you who have subscribed and made it to this point. And as always, check out links down in the description to learn things. Another kind of red day in the top 10, but all are pretty flat. Bitcoin's flat but kind of green. Ethereum's flat but kind of red. XRP's flat but kind of green. Chainlink's down 2.6%, still number 5 though. Bitcoin Cash is in the red but pretty flat. Litecoin's down a percentage point. Bitcoin SV's flat but kind of red. Crypto.com coin's up 1% even. Binance coin jumped back into number 10, down a percent. Cardano dropped out of the top 10. Poor Cardano, down 2.24%. Cosmos is up 18%. Omnivise Go's up 13%. So we got some big winners. BAT's up 11%. All right, good for BAT, I guess. Otherwise, going through the top 100, Aragon's up 10%. Looking through, seeing anything else crazy. The Midas Touch up 17%. Don't know what that protocol is, but yeah, there's just kind of blah. I wish things were doing better in the crypto space. I feel like they should be, but there's a lot of uncertainty going on right now, so it's hard to plan or time anything. But that will do it for today. I'll be talking to y'all soon. Peace.